Friday. Welcome back to the Pulver Report. Let's kick things off. It's 9 o'clock on May 10th. We are live on YouTube. We're live on Facebook. We're live on Twitter. We're live on Twitch. We're live on LinkedIn. Say hi out there, everybody. It's been a good trading week. Let's chat. Let's see how everything's been performing. I will say good morning, traders, in the chat. See who's first in. First person in gets a sweet little Friday shout out. We'll see what's happening. This morning, I just posted this in Discord. Pre-market risk on from the looks of it. The Dow is up. The SPY is up. I'm going to have some pre-market dollars to protect once we have opening bell in 30 minutes. I'll see what it is. I said this earlier this week in Equities on Demand. If I have so I have trades out to next Friday. We have CPI, we have PPI next Friday. I personally think that the news is going to print a little bit. I think the news is going to print better than expected. So this may be getting priced in right now. But I also think the market is possibly gunning for some all-time highs to revisit those levels. If it drifts a little bit higher, we're going to see some divergence. So I will be mindful of that in the coming weeks. But I don't necessarily see it just turning and fading. So anyway, pre-market, we have futures up, gold is up, silver's up. We had CAD news this morning for employment data, and everything looks to be pointed to the upside, which is good for, the portfolios for the most part, unless you're a bear, which I'm not. So anyway, good morning, Chris. Not me, this Chris. Morning, Chris. Nice to see you. Let's hop into the charts. So SPY is up around $1.30. All-time highs we're sitting here. I've got a chart alarm sitting at 424. Big gamma level today that I'm watching is the 420, not 424, 524. And the big gamma level I'm watching is going to be 523, 524 today. Benji says hi. He's ready to rock and roll this morning. So 521.47 pre-market. Let's float this down here. So this is the SPY, and I'm watching this level at 420 or 524. Yesterday, this was a really easy read. This is my software, Dynamic Trends. This actually comes with my Ultimate Option or my Equities on Demand and Delta Trader education. This was a really nice day to trade yesterday. Let me see if I can block out when did yesterday's opening session start. So this would have been right around opening bell right here. So if I point to this, so opening bell yesterday was right here. So we had just a little decline for a couple of candles. And I said all day that 520 is probably going to be hit. Well, where did we close? 520. It's not an accident. This software makes me feel smart. So it's pretty good. Anyway, I was long on a 520 call yesterday for a whopping. If I did it for a 0 DTE, that 0 DTE would have been 29 cents. And at this point in the day, it was trading for 99 cents. Not too bad. So, I mean, nothing like a 300% return in about an hour and a half. Then we had a little dip and then another retest, and it was trading around, 85 cents as well. So anyway, pretty good trade on the day. Today looks like a similar situation. I mean, based on my gamma levels, if we open slightly higher, it'd be nice to see just a little pullback and then trying to work its way up directionally to try to find a high of the week. I've already projected a move based on, let me go to this chart here. I don't know why this insists that I put this in dark mode. Trading view, it's not my preference, dude. All right, so this is my couple indicators that I have from Edgeful, which I want to talk about some of those videos that I posted this week on my YouTube channel. I did a private workshop with about 20 traders, and we had the CEO of Edgeful join me. So that was Andre came in and spent an hour with us, and we talked through. These are a couple indicators I'm using quite a bit. Inside of this, if I close this down, so this is the 9:30 to 10:30 a.m. window. That's usually an opening range breakout that I'm watching for to see if price will break out. You can see right here, pretty good price action. We break out and we retest and we go for the rest of the day. So it's, I mean, you got to wait. You don't just jump right in opening bell, but if you're patient for a solid, 30 to 60 minutes, you tend to get some really clean trades. And on top of that, if I put in my high-low close by weekday and previous week, yeah, this one. So high-low close by weekday is this. This is a Monday's start. This is Friday. We're going into Friday's trading. And if I look back, this encapsulates the entire week's trading. So what it shows me is this shows last week's high, okay? And it shows last week's high close. It shows last week's low and last week's low close. So probability is if we break the previous week's high, we're likely not coming all the way back down to test the low. That is a very low probability. So considering we started this week above the high, I was looking for price to go higher. We didn't really have a ton of exciting trading outside of Monday had a little bit of direction here. Tuesday was very quiet. Wednesday was very quiet. Thursday finally had a directional day. And then today we're gapping higher. So a gap, retest, and go. These black lines up here, I measured the weekly average. Okay, the weekly average, this is a daily. Let me change this to a weekly. We should be looking around $12. All right. See that how it says 1208 in the lower left-hand corner? 1208 is the average weekly trading range. And so I measured this two ways. I go from last week's close and I measured $12.08, which is right around that first black line. Okay. So I'm looking at something that finishes around 523 today or this week, maybe the weekly high. If we go to not just the close, but we start at where this week opened, if we go to this week's open and then the low, go up to the same $12, this gets us up to 525. So I'm looking for price today to try to get up to 523 and change, 524 the previous, close to those all-time highs, and then 525 would be just measuring this out for a weekly average around $12. Would it surprise me if we hit those this week? Not at all. Would it surprise me if next week we actually start to come back in and fill some gaps like this gap here or this gap here? Not at all. So the market just makes its move up, 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 and this is kind of the melt up. And then all of a sudden we have a structure breakdown and we start to see some gaps fills and we have resistance and we have support. We have good trading structure, right? All right. We got a lot of people jumping in the room this morning. Good morning, Gary. How are you, sir? Jan, good morning. Ann, good morning. Lynn, good morning. Let's see. I see you've brought in your secret. Well, yeah. Yep. Benji is definitely he's more like my good luck charm. Yep. And I got a little gift from Peru this last week too. So I've got the lucky alpaca. I have a sunbum little monkey, and then I've got Benji. So they keep me company every day. So my girlfriend just got back from a 9-day trip, did the Inca Trail all over Machu Picchu, and came back with a little authentic alpaca. So crazy stuff. Beautiful. I mean, I don't know if anybody's ever been, but beautiful stuff in Peru. I was here working. Ruth, good morning. Farrah, good morning. David, good morning. Sean, good morning. I'm risking the whole account today. Yeah. Just one trade signal, right? One trade signal. Let's put it all on the line. Just kidding. Actually, you know what? We had a great conversation yesterday on Equities on Demand. Gary's in the room. If I've got some Equities on Demand students, give a shout out to just some good methodology. I mean, we just kind of reviewed easy ways to manage portfolios. I'll be in Seattle next week, Friday, Saturday, Sunday. I'm actually doing a conference with Tasty in Seattle. And I'm excited to chat with the team about some, advanced portfolio management and just talk and shop with those peeps. So I really do think that they brought some great education to the front. I mean, if you're a fan of Tasty Trade or Tasty Live, obviously you see me use the broker every single day. It's allowed me to transition nicely into some pretty simple client asset management. And they're easy to work with. The support team is great. The platform is awesome. I know there's big news this week coming into the TD Ameritrade platforms. TD is no longer TD Ameritrade. It's going to be all Schwab. So everything's migrating this week into Schwab.com. So I had a couple clients that had to get in. They had to get their Schwab logins finalized. Everything will be traded through Thinkorswim platform. I'm pretty sure that this is the forced migration on the Street Smart Edge. So all that transfers into this weekend. So anyway, some moving and shaking out there in the industry. But had a real alpaca. Yeah. This is more like a alpaca chia pet. This thing is, but it's like actual alpaca fur, which is um, crazy soft, obviously. So, I mean, anyway, fun stuff, but beautiful. I mean, so if anybody goes, Machu Picchu, Inca Trail, Rainbow Mountain, those are 3 destinations. Requires permits, and the excursions are awesome. I mean, I didn't go. I'm vicariously sharing that through. My girlfriend was gone for 9 days and just got back last night, so um, exhausted, but awesome stuff from what I can see. And I was able to keep tabs and see some pictures and videos. Um, let's see here. For client asset or trading for a few family members, need to be series certified. I am series certified. I have a series 65. I will be pursuing also a series 3 and series 7 to be an official CTA. Right now, I'm operating under a CTA exemption, so I can manage for up to 15 clients. So that's what I've been doing for a while. I did that in Forex. Forex friends and family is a little bit more lenient. You can do if you have, you can do 15 U.S. clients, and then non-U.S. There's no restriction. So, but there's the CTA exemption that I found out. It's back in 2010, 11, 12 when I started to have some friends and family asking me to manage some money for them, and then referrals and stuff like that. So I want to make sure that I was doing everything legit. And there's a CTA exemption that. So it's doable, but it's not easy. I know a lot of my clients very, very well, and they've been with me for a long time. So just continue to do my thing, and I want the official CTA shop, so it's not restricted to 15, because I do have a lot of demand that I'd like uh, to satisfy, and we've got a lot of stuff moving and shaking in the background. So anyway, Donna says, yes, yesterday's equities on demand was very helpful. Thank you. I'm glad it was. And I thought so too. I mean, I just think that, I look at let me log into my Tasty account here. My Tasty account, I mean, opening up today, like we're hitting some fresh watermark highs, which I'm really excited about. We hit all-time highs today. I mean, equities on demand, we have class. I haven't received any word from A1 Trading, so I'm pretty sure. Usually they bring me in Monday, Tuesday, Wednesday. So Thursday, Friday, I think they decided to give me a couple sessions off. But I think that the ability for us to maybe look at some profits today on the SPY and the DIA from the trades we put in for next week's expiration, I think if we have the profit, I'm looking at protecting it, simply because next week is a fresh week. And if we've got, I mean, for me, if I've got maybe $1.50 to $2 net credit, and I can reestablish a neutral position next week and not overpay for it, I might do that. And I might even consider going out past next week and do some, look at the debit spread situation. But yeah, I mean, I want to see where everything's at. I mean, yesterday, the DIA towards the end of the day closed up near the highs. So, SPY, if we're hitting 521 and we have another $2 to $3 to the upside today, it'd be awesome to see it up to 524. Our strike price, let me bring up Telegram here. Thanks, Gary. Let me go. So the trades that we have, I'll just check one account, SPY. It should be a May 17th expiration on the SPY. So our long call is the 518. So we have the 518 to 531. If I put this whole thing and look at a closed position right now, it's not going to be actual live price because we're not at opening bell yet. But this is showing 632, and we took the debit for 625. So obviously, I want to see if price opens up, and if this is at like 732 or 750, it might be worth considering profit and it's not just the SPY and the DIA, but it's going to be all of them. I took trades on the SPY, the DIA, the QQQ, and IWM. So if all 4 of those collectively are up, let's say $2, $2.50, $3 net credit today, I might look to take some profit. I do think that the SPY and the DIA have been outperforming the others. The Qs aren't nearly as good. So the Qs are sitting at 442, which is $1 higher, but you can see that is not quite near the all-time highs. This is up to 449. So unless we see a big directional play, today, which could be the case, and we have some time premium going into next week, so maybe this actually offers up a little bit more profit. But the QQQ position is, let's check here. Let me see what so I bought it. It's an odd expiration. It's a long call at 441, and we're trading at 441, opening up at 442. So I don't really have an incredible amount of real intrinsic value yet. But if we have a decent directional move up today, I mean, we're at 657, and I paid 690 for it. No, I paid 710. So I'm down about 50 to 60 cents for today. But obviously curious to see what type of volatility we get going into next week. So the trade looks like this, where I have my long call, my long put, and then I'm selling against that to lower the cost basis of the debit a little bit, and also give myself some room to let this thing run to an expected move. But the DIA, this one's actually probably doing the best of all of them. I mean, the DIA ripped to the upside. The market seems to be loving this, top 30 blue chip, mega cap, healthy companies. The DIA's come back in a big way. There's the Apple gap from last week, and here we are pushing higher, nearing all-time highs, just like the SPY. So we started this trade with some more upside potential, and the DIA is the May 17th expiration. This will be a little bit easier on this account here. So 1, 2, 3, 4. We took this debit for 426. I think right now it's trading over $5, 5.15. So if we open up a little bit higher, this one's probably going to be up $1. If we have another directional push today, this would be nice to see like $1.50 to $2 credit. If I see that, I'll probably end up taking some profit. Like I said, collectively, if I'm up $2 or more on all 4 of those trades net, I'm probably taking profit, and that'll give me some nice little short-term profit, and I'll reestablish something neutral for next week, right? Part of me does wonder, there's 2 ways I see this market kind of playing out going into the next couple of weeks. One is the market clearly seems excited, right? I mean, it's funny how freaking fast this sentiment changes. It's like the market could do no wrong. The market could do no wrong. All of a sudden, it's like, okay, this is getting a little long in the tooth. I think a correction is near. Oh my gosh, it's overextended. It's overbought. The market's going to correct. And then, the market makes one big sell-off day. It's like, oh my gosh, higher inflation. The Fed's going to go from, 2, 3 interest rate cuts to 0 interest rate cuts, and the market just drops down. Well, what happens? Thankfully, earnings have been really solid, right? Microsoft, Google, Meta, Amazon, even stocks this week. I mean, this has been for the most part a broad market rally. I read yesterday in what was the opening bell something? What was the newsletter that I talked about yesterday? Opening bell daily. Yeah. Okay, so yesterday I read this Opening Bell Daily. It's a newsletter I subscribe to. It's just straight up, what do you want to know about stocks? I've been a big fan of Morning Brew for a long time, and I still like Morning Brew. It's mostly financial news, but they sprinkle in a bunch of other stuff too, which is just random, scuttlebutt at the water cooler type stuff, which is fine. But I want to know. Let's dive in. Let's dive into the markets a little bit. They use FactSet, which is like a Bloomberg terminal, so makes my summary a little bit easier. Anyway, so yesterday we talked about this. Wall Street profits have silenced recession concerns. They've actually had upbeat earnings, where as a whole, the S&P 500 has outperformed. The word recession has been reduced big time from earnings calls, the forward guidance, which I thought this week was a big indicator. If we had, cautiousness moving forward, or we had optimism, that's going to reflect in prices this week. And it looks like it's reflecting in more optimism, guidance in GDP, guidance in growth, guidance in profit margins. It's getting better. The one thing that's interesting is the market got really excited about jobless claims on Thursday. The market got really excited about non-farm payroll missing last week. And I think that's totally fine as like we see a softening labor market. But there's also a fine line between softening labor market and all of a sudden, oh my gosh, that's like big misses now. And that's the labor market's really softening. And do we have more cuts? And are we actually looking at job losses that are getting a little bit more problematic? Well, we don't know if that's the line yet, if that line has been established, or if there's a little bit more slack in the job market for that to be a problem. I keep saying, if we see the unemployment rate creep up to 4.4%, that's not a good thing, because that's a running 12-month 1% move. If you increase in unemployment in 1% at any given time over a 12-month period, recessions tend to follow pretty shortly after. Way faster in that time window than trying to see like the inverted yield curve that they've been saying. That's why everyone was talking about a recession 2 years ago, right? We had the inverted yield curve. It's been one of the steepest inverted yield curves. It's been one of the longest sustained inverted yield curves, and we're still not back to normal. But here we are, no recession, no recession, no recession. Everyone that's been recession in the recession bandwagon has been wrong, So anyway, point is, let's see what we have this morning for opening bell daily. The next recession won't come from a credit crunch. Says the Fed was able to stave off one of the most common catalysts for a downturn. S&P is back above 5,200. Index touches higher marks since April. Fresh jump in jobless claims because the data suggests higher odds of the Fed to cut interest rates this year. As we see, we can go into the CME watch tool and see if it's probably still back to 2. Most likely September, December are the 2 rate cuts. So pause for June, pause for July. First rate cut anticipated to be, it's about the same percentage. This hasn't changed much. 48.5% probability in September. And then November is supposed to be a pause. There's your pause. December is possibly another cut. There's your cut. So September, December, still firm from last week on 2 cuts this year from the Fed. That's the anticipation. Let's see here. In theory, the Fed loosens. The sooner the Fed loosens policy, the lower the likelihood of recession. As the market showed yesterday, investors love that calculus. Let's see here. No sign of a crunchy credit. So everyone's worried about like a Volmageddon, or everyone's worried about a credit crunch. Let's see here. So everyone wants Fed cutting interest rates because that's what's safe. The lower the rates, the lower the odds of a credit crunch in the scenario when borrowers get great credit turned down for loans. Usually recession follows. So right now, we are not raising rates too fast because we're no longer hiking, or we're holding rates for too long, which was the concern this year. But right now, looks like that pause and higher for longer is now starting to see a light at the end of the tunnel of maybe cuts are coming. So anyway, good stuff. I'll finish that article. I don't need to read it out loud, but we'll chat about it. Okay. Morning, Joe. How are you? So anyway, this is what I was going to say back to the charts. I think there's 2 ways this plays out, right? We have we've kind of shrugged off the decline. This is about a 5 to 6% decline in the SPY, 5 to 6% in the Dow, about an 8% correction in NASDAQ. Right now, the SPY and the Dow, as far as like the broader market, or kind of being led by I guess it's being led by healthier companies in a way, like the Dow 30 of the biggest companies in the world. It's not market cap weighted, it's price weighted. So you can take a huge company like Microsoft or Google or Amazon. If they make it into the Dow, those are price weighted index. It's a price weighted index as opposed to market cap, which is, they rebalanced the S&P and they rebalanced the NASDAQ because the market cap has been getting so big that it was the top 5 or the top 10 companies that were essentially dominating most of the market cap. So I see this chart playing out a couple of ways. It would make sense to me that the market gets a little bit more excited after we had this kind of slow correction. And so, look, think about the technicals. We had a very aggressive wave down, and we just spent time retracing. And it wasn't that convincing, right? If you think about this in most trades, when you have an aggressive move this way and the market struggles and struggles and struggles and struggles and struggles, you're just waiting for the bears to resume that trend, right? It's just a matter of, do you get a clean breakout? Can you look at this from structure standpoint? And so I was looking to see if the market responded to that area. It didn't. The market closed above it. So now that that is the case, I still think there's a case to be made for a trend line break eventually, but we are drifting higher, possibly get into these all-time highs again. But like I said, 2 ways I see this playing out. One way is the market's so excited right now, it doesn't care about anything other than trying to carve out new highs and continue to go higher. That's scenario 1, okay? Scenario 2 is that we get to this high, and then we have a reality check. Maybe next week's inflation isn't as good as everyone hopes it's going to be. I think that because we've already had 2 or 3 misses in inflation, and I truly think this. I think the inflation report next week, it's not forecasted yet, which is always annoying that we come into. It didn't used to be the case, but over the last couple of years, when news has been so important, it's a major catalyst. Going into next week's trading. Oh, there is a forecast. Thank you. Okay, so we have PPI forecasted, month-over-month 0.2 and 0.3, and then yearly CPI 3.4. So we printed, this was a forecast of, let me see here. this was a forecast before we had 3.2 and then printed 3.5, right? So last month when we had our, I guess it'd be our March inflation, we forecasted 3.4, came in 3.5. That was slightly higher than expected, as was core PPI as well. So going into this week, or this next week on Wednesday with the 8:30 news, we're forecasting a 3.4. Something tells me that going from 3.2 print and printing, so this is considered, right now this is a miss, right? We forecast 3.2, we print hotter. 2.9, we print hotter. 3.1, we print hotter. 3.4, we print hotter. That's 4 misses in inflation. Something tells me there won't be a fifth. Let's just call it intuition, all right? I don't think we're going to forecast 3.4 and see another 3.4, 3.5 print. I think we're going to see less than 3.4. All right. Also, you want to know a big contributing factor to this? Oil prices are down. That's a big one, right? Oil prices are way down compared to where we had these hotter prints. I mean, think about what oil's done over the last 3 months. Okay. So we had 4 misses, and this goes to the peak here in April. Here's March. Here's February. What did oil do for all those months? Oil was bullish. Missing inflation, it was hotter and stickier. Missing inflation, it was higher and stickier. Missing inflation, right? 4 times in a row. Well, what's oil been doing lately? Dropping. I think that gives the market a window to see that we can finally have a lower inflation print thanks to oil prices falling. Now, that doesn't mean that oil is bearish. I still think that oil holding here and supporting here, if we get a break back above this trend line, I think oil is still a potential concern. But trade-wise for me, I'm buying oil here. I'm selling oil here. It is certainly a lot more challenging and tricky to trade in the middle because I certainly didn't think that the market would drop like this on, for what reason? I really don't know. You know, this could have been more supply and demand. We clearly have some conflict still going on where it should affect oil prices, but it's not. And anyway, we have to see. But I don't think we're going to have 5 misses in a row. I don't think they're gonna forecast 3.4 and have it come in higher. I think that they forecast 3.4, it probably comes in 3.3 or 3.2, and then we start to resume a bit more of a tick lower, and maybe the market is a little bit more relieved. If I go to Trueflation, let's see what they have a reading for. This is a third party. Oh fudge, I have that website. Yeah, Trueflation. Give me my, oh my gosh, dude, just give me my Trueflation. I'm just looking for my inflation index. Where did it go? This used to just pop right up to it, unless it's weird. About us blog pricing. Is this it? I don't know. Let's see what this is. This has a lot more crypto-based stuff than there it is. That's what I was looking for. Give me my stupid inflation. There it is. Okay, so aggregated inflation. Let's go to all right, this is, I feel like they're hiding everything now to make you pay for it. U.S. inflation index. Thank you. Let's go this. Can I not see it? There. Good Lord. All right, 2.3%. So this is the current run of the USA daily inflation rate, Trueflation rate. So this is third party. They calculate a different way. I don't know the formula, but you know, we are seeing that from our 1.99 on this particular indicator, you know, sub 2%, we're back above, we're back below. But if I extend this out, I can go out to a year. You know, we're still coming from, you know, 9% inflation down to 2-3%. We know that last year the market got excited about deflationary pressures. With oil falling, I think that takes away some of the stickiness of inflation. So anyway, point is, I think the market is likely going to enjoy some of the inflation data next week. I could be wrong, but based on what I see here, it wouldn't surprise me to see the markets try to break these highs. That's what I'm saying. Okay, that's a long-winded way of saying I think that we can get up to these highs going into either today as we get into next week and we're sitting right at this top. And look, I'm here. We had another gap, right? We have a gap right here. We have a gap right here, and we have another gap today. So if we don't fill today's gap, then I would look to, we probably will, but if we don't fill today's gap, if we come up to these all-time highs again, next week tells me that technically we probably at least have a gap fill. But if the market likes the inflation news, we go to new highs. And this is a whole new bout of momentum, right? It's like the market shrugs off a 5% correction, and here we are plugging away at new highs. Now, if that helps tech and if that helps small cap, IWM with a slight gap higher at 206. Can we reclaim some of these recent highs at 211, 212 on the IWM? I have an expiration on the IWM out to 210. It would be maybe worth rolling if I do that, actually, maybe. But we'd have to breach these highs here at 210, 211. So let me move this chart alarm down to 210 because I will probably do a quick adjustment to that and try to reduce my cost basis a little bit, or try to bump this up to 211, 212. And I still have essentially a December, January expiration on IWM to see if the small cap can play catch up. One of the index trades I really like is if we can break above here and get to all-time highs in the IWM. Let's see if the Dow can hit 40,000. Let's see if the IWM can actually reach all-time highs like we did on the SPY and the Qs. So if that's the case, that is a catch-up trade that does offer up some pretty good return. So from current price to get to the all-time highs, that's a 17, almost 18% rally. If we get another, 10%, another 8 to 10% in the current indexes, that's going to push us up towards, 20% on the year for the broader markets. That'd be a SPY up 20% for the year, without much of a pullback outside of that 4 or 5% correction. So anyway, I am positioned for that. I do want to check and see. So right now, the DIA 1, 2, 3, 4. It is trading at 550. I'm up $1.25. I want to see if we continue to go green on the day. Let me float this back out here. Let's get some gamma levels. Let's go real time. So this one is lighting up the most. So I've got the 524 today. Let's see if we can get there. Let's go to the DIA. We're at the gamma level at 395. The other ones are a little bit hit or miss. Let me see if this gives me pre-market. Yep. So 395, we're already there. I hope the Dow can push a little bit higher. Maybe it can. Let's go to the Qs. The Qs. So interesting. This is the Qs back down towards 439. That is a notable one today. Let me go pre-market. Yeah, 439 was a pretty big one today, but we are pushing higher. We're at 443 already. These are starting to fill up. So let's see the difference here between pre-market and real time. Pre-market, it's like, okay, if we're pushing lower, then we'd be looking at 439 on the Qs today. But real time, you see how these are filling up to the upside. Before we had no volume to the upside, and right now we're showing that these gamma squeeze levels are filling up. So we're hitting this first level at 443. If we start to fill these other ones up, we can just drift up to 444, 445, get into some open space here. And then that's a pretty good check. And then IWM is retreating a little bit. Let's look at our real-time levels. Pre-market, pretty even both ways. It's been a choppy index for the most part. I don't see a real clear winner. If we fill the gap, it's kind of stuck around this 206 to 205 window. But anyway, let's watch. I'm going to watch the SPY on the day. I'm going to watch the SPY on the Qs. If the SPY gets up to 524, 525, more than likely I'm definitely taking some profit on the SPY and the DIA. So that's at least my game plan to maybe grab some early profit, not even have to wait until next week. This one's already up $1.25. That's nice. If I go to the SPY trade, we had a 625 debit. And right now that SPY is trading for, survey says, SPY for the 17th, 1, 2, 3, 4, 685. So I've got $1.25 in profit, and I've got another 60 cents in profit, right around that $1.80, $1.95. But I think I'm upside down on the Qs and the IWM. So across the board, I'm not $2, not $2.50. Let's see what today gives us. We keep pushing higher. I'll keep looking, see if I can manage some profit this morning. All right. Okay, that is that. Good. Appreciate that, Donna. Thank you. Let's take a look at some other stuff. Let's look at gold and silver. Gold is at 23.67. Still has not taken out the previous highs at 24.30. Take a spot check on gold. We gapped up to 219 on GLD. We're looking at highs at 225 to be revisited. If we go to silver, silver's actually been performing pretty well. That was a beautiful technical bounce right off that $26 mark. Went all the way up to 20, almost $29. Still has not eclipsed recent highs at 29.80. So are we getting, silver is this rip here, little correction. Are we going to be able to go and break those highs? If so, cool. I'm fine with that. But if this is a push and it's a little bit more consolidation, I could see silver doing this, where we have to get another leg and it's going to take a little bit longer to get that push. So I'm still patient on silver. We do have an expiration out next week on SLV for a 27 by 26. Right now we're trading at 25.90. So we're not in profit yet. I actually did that trade with the intentions of taking some ownership of SLV and using some covered calls to lower the cost basis. But if we get up above 27, then there's no assignment. We keep our 60 cents credit and we see if we make some fresh highs. So we will manage that one next week. And then also we have the long calls. We have some leaps out on SLV to January and looking to see if this year silver makes a big run towards 32, possibly makes a run up towards 45. That'd be SLV. Bitcoin is gone nowhere still. Bitcoin still at 63,000. Chart alarm on this trend line has not activated. The low at 56, or this recent low at 56 and this recent high at 74 has also not activated. So it's more of a watch list for me on Bitcoin. This probably needs some NASDAQ love, to be honest. If the NASDAQ hits highs, I think Bitcoin has some additional correlated movement to go to the upside, but we probably need to see some tech love coming soon. All right. So that's gold, that's silver, that's Bitcoin. Oil is down. The dollar index is still postured to possibly stay a little bit more bullish. Oops, let's go DXY. DXY. But I'm still just kind of waiting. The dollar's just messy. I don't like the dollar currently where it's sitting. To me, I'll be a dollar bear in this area, or I'll wait for something a little bit more obvious that the dollar's getting back above and trying to pursue some higher highs with some stop losses on the basket. Otherwise, if we look at currency strength today, CAD got a big jump from the news. CAD is the strongest today. The New Zealand was the weakest. Now the JPY Aussie a little bit softer. Swiss is a little bit softer. I'm still, pretty bullish on the Japanese yen crosses. They've come back to fill those big pockets. So Aussie yen all the way back up to the inefficiency candles from the intervention we had last week, which was twice, by the way. So came all the way back to fill that pocket with a nice little double bottom there. CAD yen, same thing, trying to come back into this pocket here. I told everyone this week in the flex room, if you are long on the yen crosses, if you got long with this type of structure, long stop loss below, you're happy. You're up a couple hundred pips on most of these currency pairs. Putting a stop loss in and just trailing. Stop loss, stop loss, stop loss. Just trail this thing. If it wants to go higher, let it go higher. And just keep canceling, replacing the stop loss. Make it easy. Just keep protecting profit. All right. Really quickly, I want to show this. I posted this yesterday on my Discord channel. If anyone did not get a chance to see this, look, number one, you can join my Discord. I can post that link. Most of you probably are in it already, but I'll post it right here. So invite. Let's go. It doesn't matter. If you click on it, if you're watching this live, or you've got 7 days, if this is the link that I can post during the live chat. So I'll just put 7 days, new link. Actually, I'll just make it so it doesn't expire. Don't expire, new link, copy, and then I'll post this in the chat. So join my Discord channel. There's the link right there. And if you pop in here and you join my Discord, if you scroll up, you can see the chat history. So if you go into the free group chat, you can scroll up a little bit from yesterday's post, and you'll see that I have a poll here of would you be interested in trade signals from me? And I wanted to see what's, yes, no, and also want to see what assets everyone's interested in trading. So it's an interesting mix. Essentially it's people want to see Forex trades and people want to see all signals. Obviously I can do all of that. So I don't think I'm going to have, one channel designated to everything. I think I'll make it so it's like, here's a Forex channel, here's a stock channel or options channel. Because stocks would include ETFs, it would include the indexes. But it'd be pretty simple to trade the SPY, the Qs, the DIA, the IWM indexes, or you can trade the equal weighted ones like I'm trying to think. The oh fudge, what are the equal weighted? Yeah, the RSP is the equal weighted S&P. The QQQE is the equally weighted NASDAQ. And then you have the IWX, which is the top 200 of the Russell. So instead of trading the top 2,000, you can trade the top 200, which has been outperforming in a big way. It's been way outperforming the overall index. Here is the weekly time frame. Number one, the top 200 in the Russell have eclipsed the all-time highs, and it looks just like the SPY, just like the DIA, just like the Qs, right? Or just like the major indexes. So we're above all-time highs, which means this could offer up some support, which is what it did this last couple of weeks. You know, so there's lots of ways to trade those ETFs. They're also way more cost effective, and your trade is essentially, the basket of stocks that are with them. So that is, I just want to make sure everyone had a chance to see that. If you want to jump in here and vote, I'll keep it open until end of day today and start kind of planning accordingly. So I do have a couple channels already prepared for some of those signals, so I can do some Forex signals here and some stocks and options signals here. But those are going to be, dedicated to that particular thing. So this is more all my content all in one place. These will be more dedicated to just specific signals. So I just want to see, number one, who's interested. Number two, what asset classes you want to trade and how it's going to help. Okay. All right. So welcome in, Mark. Nice to see you. Thanks for joining with our cool little tomato guy. All right. Anything else? Let me see if I've got an A1 trading invite. I do not. So we'll go equities on demand at the top of the hour. And we are up a little bit higher today. I think the first thing we'll talk about is let's just evaluate the P&L on all of our indexes. I don't really want to close out first thing today because we could obviously run and have a higher high for the week. I think that if I did this on the SPY, this is a logical level to take profit. So like I said, we broke last week's high. We started here, measure the move out. Can we hit this week's $12 move? If we can, we're right into this window. I think that's a great spot to protect or at least evaluate our P&L. It's not going to be, we're not making $5, $6, $7, $8 per contract. It's like maybe we make $1 to $2 per contract. But if I can today close out for, $2 to $3 net profit, and I can reposition for next week for something good or something bad, that's good. Because I think to the downside, the volatility kicks in a big way. To the upside, we just continue to drift a little bit higher. So it really just depends on what our volatility looks like next week. IV rank on the SPY is 9.7. It continues to favor buying options right now. This is crazy. Our volatility, look at the VIX. The VIX is probably pushing down to some fresh lows once again. The VIX is down to some fresh lows at 1282, right? What is it going to be that just it's not going to be like, oh my gosh, the VIX is at 50. No, it's going to be the VIX at 20 or 1750. It's like, what causes it to hit these lows and then spike up? I don't know, right? I mean, next week could be a spike if we have a big miss in inflation for the 5th or 6th time, but I don't think we're going to have that. So I think as we pepper these lows, I'm looking at something into maybe, end of May, June that at least gives us a little bit of a hiccup. But I don't know what that's going to be. Could be a, conflict related headline. It could be something China, Taiwan. It could be something Middle East. I don't know. I really don't know. But I don't think we're going lower, right? We're probably not going much lower. If we do, okay, fine. But I mean, we have been very consistent about holding these lows, and you can see that it's very, very low. When we had that big rip in the markets, I mean, volatility was extremely low, and we're back to those levels. So what this could also mean is that there's just a ton of buyers. If there's a ton of buyers and an absence of sellers, market's going to go higher. Market's going to drift higher, go higher, and there's really no opposing side. One thing I could look at here is also let's look at the fear and greed index and see where we're at. We're probably back to greed. Neutral. Okay. So until this gets more extreme, I mean, we could see this dial get into greed territory, which means there's potentially more upside. Okay. So yeah, I mean, we're in the neutral zone, which doesn't make us, we're not thinking like, so look, when we were at extreme greed, I was cautiously bullish and I was also getting positioned to go for a correction, right? And then we quickly went from extreme greed down to fear, and now we're back to neutral because the market's correct a little bit. I wouldn't be surprised if this eventually gets back up into the greed section. But it's, again, greed is okay. It's not like we have to be, oh man, let's be fearful. Let's be cautious. It's like greed's fine. I mean, fear's fine, greed's fine. Extreme is where I start looking for bottoms. If we're down here, I'm looking for bottoms. If we're up here, I'm looking for tops. It's a very good contrarian indicator, right? What else? Stock price strength. We have extreme fear. Interesting. The new 52-week highs and lows on the NYC, or the NYC, the New York Stock Exchange, NYSE. Extreme fear, huh? Breadth is neutral. So this is one thing I would like to see tick higher, to go from neutral to greed or get something more bullish, because right now we have a lot of underperformance by the broader market. Okay. Also interesting here, put and call options. We're kind of right in the middle. It's pretty neutral. I do have this also on my charts. If I float this down here, go to a higher time frame, check this out. I can see out for the next couple of weeks. So a 516, 517, 621. If you take a look at some of those levels, these are my calls and puts in the markets, and these obviously will change in real time as they come in. But for next week's expiration, we have slightly more calls than puts, slightly more. When we go out to the 17th, which is Friday next week, we have slightly more calls than puts. We go out to June, we have slightly more puts than calls. We go out to July, we have more calls than puts. So something tells me that possibly the end of May could see a little bit of a correction. But going into June, July, it's possibly another push higher, or maybe June is a correction month and July is another bullish month. I don't know, but just some other tools that I use. That's all with dynamic trends. You can see that in my my education link in my Discord channel. So, but I consult this thing every day. This is part of my Equities on Demand, a Delta Trader package, and very useful. Yesterday was an easy trade to take it with a 0 DTE. The gamma levels are awesome. They are really like getting a visual roadmap on where price is likely going to go. It happens in real time. So I do love that thing. Market volatility neutral, safe haven demand neutral, junk buy neutral. So yeah, I mean, nothing out there that makes me contrarian. I think we have some room to continue to go to the upside. All right. Let's go here on the 5-minute chart. Still green on the day, gapping higher, pushing higher. I'm still going to look for 524 on the SPY. And let's see what we can get. So if I go daily time frame, 522, I'll take a look at this one more intraday. This is my opening bell range from 9:30 to 10:30. We have a gap today. I'd love to see price do this. If we can tap the highs or get into this window today, we might see a gap fill maybe coming towards the end of the day, but that pushes up. So if my green box were to stretch up into this area, that would hit roughly the average of the weekly trading range. We don't have to close up there necessarily, but if we have at least a push up into that zone, we're probably looking to take some profit. So easy stuff. All right, so it's 9:48. I think I'll take a little breather. Let's go top of the hour, 10 o'clock Eastern time. Let's get into equities on demand, and we'll first jump in and look at our net P&L on the major indexes or the index plays we have for next week, and we'll talk shop a little bit. And happy Friday. Also have, I've got to edit this one comment. Today also at 1 p.m. Eastern time, I have a 6-figure ultimate class there. So live here for the Pulver Report, 10 o'clock equities on demand, 1 p.m. 6-figure ultimate. Robot wise this week, things have been pretty solid. Perfect Storm. Perfect Storm's up 174 pips this week. Perfect Storm Pro is up 215 pips this week. Pockets Pattern Pro is up 39.9, almost 40 pips this week. Hypertrend up 161 pips this week. And 6-figure, I did some manual closing earlier in the week. It's up 887. So pretty good. I mean, overall, pretty good week for auto trading. Couple of robots. Again, those are in my Discord channel under education. If you're interested, you can just send me a direct message. But I've got links available, classrooms available, full strategy guides, robots, all that good stuff. If interested, also do a lot of one-on-one instruction. Anybody wants some private sessions, 1 or 2 hours, typically, 1 hour session, and we go, 60 minutes and cover whatever you want. So hopefully that helps. 1 Eastern time, Sean. Okay. Yep. I'll see you in class, Sean. Perfect. All right. I guess that'll do it for the Pulver Report for Friday the 10th. Nice to be live with everybody. Thanks for tuning in. And Equities on Demand students, I'll see you in about 10 minutes. Cool. All right, everybody. Thanks a lot. If you have a chance, 2 things. If you would kindly like this video, just, if that really helps the channel, of course, it does go a long way. It's the silly little YouTube algorithm. So hitting the thumbs up button, subscribing to the channel, anytime that you like a video. Also, a comment is a big deal too. Like simple things on YouTube to help this algorithm and get my channel out there for more people. If you like the video, leave a comment. Awesome. That is a huge help to the old YouTube formula, and that helps this channel pop up on those the scroll bar. So when everyone's getting into something that's like financial markets related or forecast related. Also, I did that this week where there's a couple videos you didn't have a chance to check them out. If you come to my channel, this is our youtube.com/Chris Pulver Trading. Go into videos. The latest ones I just posted, I just did a market prediction for the second half of 2024 and also big picture talk into 2025. I posted this video last week on trading. This would have been, it's 2 weeks ago. So this is a little bit of a sneak peek if interested. This is a sneak peek on using Edgeful Dashboard, using the dynamic trend software for gamma squeeze levels and 0 DTE, also trading weekly options. And then we had the CEO join us this week for a little private workshop, and we came in, worked together for about an hour, and then we extended that session into this market prediction. So I spliced those up and made it into 2 videos, but if you have a chance, check those out, and I appreciate it. And if you leave me a comment, awesome. If you like the video, awesome. Subscribe to the channel, great. Join the Discord. You know how to find me. Okay? All right, everybody. Thanks a lot. Happy Friday. Take care. I'll see you on Monday. We'll be back for the Pulver Report 9 o'clock on Monday. And Equities on Demand students, I'll see you in about 10 minutes. All right, thanks. Bye.